Hey guys, Dennis Tubbergen here with another economic update. It is Wednesday, April the 18th, 2018. Today I want to talk about housing starts, and there are several resource sites that I like to use. One of them is Advisor Perspectives, which is just an excellent site with a lot of information on, a lot of contributing authors. It's run by Doug Short. I'd encourage you to check it out. There's an article published yesterday, and the headline on the article is New Residential Housing Starts Up in March. I'll give you just a bit from the report here in the gray shaded area. Privately owned housing starts in March were at a seasonally adjusted annual rate of about 1.3 million. That's a 1.9%. That's 1.9% above the revised February estimate of 1.295 million. And is 10.9% above the March 2017 rate of 1.189 million. Single-family housing starts in March were at a rate of 867,000. That's 3.7% below the revised February figure of 900,000. The March rate for units in buildings with 5 or more units was 439,000. So a lot of multi-family housing starts going up. And if you take a look at these numbers and put them in perspective, because really numbers are numbers. You need to put them in perspective. There's a terrific chart in this article, and it's the historical series for total privately owned housing starts dating all the way back to 1959, and the dots on the chart show the actual numbers, but the blue line is really a 6-month moving average. So basically, that blue line is calculated and plotted by taking the prior 6 months data, adding it up, and then dividing by 6, the same way you'd calculate any average. Now, if you take a look, this line across the chart shows the current level. And if you look at that line in relation to where the housing starts are, the 6-month moving average of the housing starts, we're still a little bit below normal. But to put it really in perspective, you need to take a look at the population-adjusted housing starts. So basically, if you take a look at the housing starts relative to the population, so this chart's actually labeled housing starts as a percent of the population, you see that that trend is going down. In fact, if you look all the way back to the peak, really in 1972, about almost 1.2% of the population was involved in a housing start. Now that number is 0.4%, which is double from where it was at the end of the financial crisis, but still a far cry from almost half of what it was back in 2006 at the peak of the housing market. One thing that strikes me is that we have on this chart a series of lower highs and lower lows. So I expect that with all the artificial stimulation we've seen from the Federal Reserve over the last 10 years, that a lot of that newly created capital has gone to stocks and real estate. And I am expecting that we're going to see real estate decline moving ahead with stocks. That is today's economic update. It's Wednesday, April the 18th, and I'm Dennis Tubbergen.